Hey everybody, it's me, Gregory Mannarino. I am trying very hard not to laugh. Bear with me a minute. I'm sorry, but I don't want to restart this video, so just kind of let me balance this out a minute here. Why am I so giddy? Well, nothing short of a freaking miracle on Wall Street today, and we need to cover this. It's wow. That's all I have to say. Okay, let's let's start off with the basics here. For the most part, this stock market finished higher today. The Dow Jones Industrial Average put on a fractional loss, down 22 points after being down nearly 600. This is pretty incredible. Now, why is this especially incredible? And why am I laughing my you-know-what off all over the place over here? Very simple. We had a monster rally here in the debt market. What does that mean? Huge amounts of cash flowing into the debt market. So a massive rally in the debt market and a pretty massive rally in the stock market. Simultaneous rallies here. And no real investor would have been trying to catch a falling knife in this environment. This is the New York Federal Reserve, who has a trading desk, and Steve Mnuchin, his 6 Wall Street banks, buying everything up at the same time, and they are firing some hardcore salvos at this market. Today, just so you're aware, the 30-year bond hit an all-time record low at one point today. Let me put another perspective on this for you. The federal funds rate, the short end of the curve, right now is between 2 and 2.25% after the last Fed rate cut. Earlier today, the 30-year bond was yielding 2.13. Now, if you were to go to the Federal Reserve's own website and see what the federal funds rate is for this week, it is 2.25. That is a massive, full spectrum yield curve inversion. But yeah, stocks just had to get bought up, and I mean in a big way. Could you imagine how much cash had been put into this stock market to push it off of being down nearly 600 points? It's pretty awesome. It really is, and that's why I was laughing, because what you're witnessing is just not real. There's no price discovery here. It's an incredible situation that we're in. Gold and silver, of course, doing real well. Crypto's doing real well. I don't know how many of you are paying attention to what else is going on here, and it's incredible how the mainstream financial channels are spinning it. Are you ready? Sit down. Central bank after central bank after central bank is dramatically lowering rates. Well, and they're saying it's a shock to the market. Everyone is so surprised, not you. I've explained to you since how long now? Maybe you want to post the first time you heard me say it, that central banks all over the place had no choice but to continue to lower rates. I mean, man, I tell you, these mainstream financial people, they are so behind the curve, it's laughable. They don't report a damn thing. I don't even know what they're doing there, honestly. They don't think for themselves. It's truly the confederacies of dunces. And I don't know how much they get paid to sit there and read a script. It must be pretty good to sell your soul like that. I wouldn't do it for any amount of money. As most of you know, I was recently offered a position at JP Chase, the largest bank on the planet by assets. I didn't even ask what the job would pay. Probably a significant amount of money. I won't work for JP Chase. I will not work for any Wall Street bank. You know who I work for? I work for you. And I work for you for free, because I really feel like I'm doing something worthwhile that makes a difference in people's lives. That's what it's all about. It's not about money. It's about making a difference. And I believe, at least I would like to believe, that I am making a difference just from the feedback I get from all of you. And yes, I love every single one of you back. It's the truth. So again, just an absolute miracle, I guess. What would you call it? If this wasn't a miracle today, with a massive simultaneous rally in the debt market and both the stock market, wow, I don't know what is. But let me explain this to you while we're on the topic. We just happen to be. If again, history is any guide, the bond market is always right. It's not the greedy traders. Do I consider myself a greedy trader? No, I really don't, and I'll tell you why. I'm not looking to hit this market over the head with anything. I get in here with like a rapier, a sword, and I try to scoop out little what I call IPOs, in, profit, out, using my quant system. It's very, very simple. I had one trade today and only one. I made a small profit. That's it. The market was way too volatile for me to get in here, even using my quant system. Too crazy. And again, if you want my quant system, it's free for you. I don't ask for anything. It's just go to my website. It's right there. There's a link in the description of this video, traderslovelychoice.net. Be a freaking lion here, people. All right, so anyway, I am sure that you are understanding this from the proper perspective, where we are now. It's kind of incredible to watch this unfold, but it's funny. I mean, I'm sitting here cracking up. You should crack up too. Laugh your freaking ass off. Just do it, because it's just too incredible. And again, it doesn't matter what they do. In the long run, they can prop this up. They can push rates even lower. President came out again today calling for lower rates, which are coming. All these world central banks are doing it. The Fed will follow suit. China's currency devaluation, other banks are going to follow suit. This is going to make your life a lot harder, struggling to pay bills, struggling to just make ends meet. More people that have to borrow from their credit cards. Consumer debt, all-time record high. Household debt, all-time record high. It's not going to stop. This environment of distortions is literally, and I mean this, off the Richter scale. I know I use that term a lot, but it's true. I think that's pretty much it for today, and I would love to hear from you. What do you think? Was it a miracle today, or did you expect the Federal Reserve, which has a trading desk? Could you imagine that? The Federal Reserve has a trading desk, and they are in here buying stock like there's no tomorrow, because there really isn't one in the perspective that they want you to believe. At the same time, having a massive rally in the debt market, pushing the entire yield curve even more deeper inverted. As a matter of fact, a massive full spectrum inversion occurred today between the federal funds rate, which currently is 2.25, and the 30-year. Hold on one second. While I got you here in real time, being that we know this week the current federal funds rate is 2.25, let's just laugh a little bit. Maybe we can crack up together, because I would love us all to do it. And let's look at this. Oh yeah, okay. The 30-year Treasury, 2.23. Oh, and it's changing, 2.233. Lovely. 2.233. To me, that seems a little bit lower than 2.25. Yeah. Full spectrum yield curve inversion, and you just saw it. This guy, I'm out of here. I just scared my dog. I'm sorry. He's looking at me like, Daddy, what the hell was that? See you in the morning.